Hey, what's up guys? John here. What Nancy and Paul Pelosi just did, I believe signals a major shift with San Francisco, and what I think is going to be is a shift that's going to happen across all cities in America. And if you're an investor, you're a property owner, or you're just an American, pay very close attention. Look at Nancy's track record. When does she lose? Every bet she makes seems like she just multiplies money. This big bet, betting on commercial property, distressed commercial property in San Francisco.
You smell that? What is that? What's that smell? Money. I smell money.
If she loses money, I would be absolutely shocked. I'd bet she's probably gonna make 5 or 10x. And I think there's gonna be tons of investors following her into this major opportunity. Here's what I mean. So Deloitte just came out and said that we're gonna see an 80% rise in cost for commercial property. So it's gonna get a lot more expensive to insure commercial property. At the same time as that's happening, you're seeing vacancy rates explode. 2018, 2019, you might have seen 4 or 5% of a building being vacant. Now in San Francisco, it might be 30%, maybe more.
As Americans continue working from home, several U.S. cities are having trouble filling office space.
Skyscrapers and office buildings once stacked high with businesses are experiencing high vacancy rates in the U.S.
It's just sitting vacant. So commercial property is only worth the income that it's really driving. And so when you have 30% of that income basically disappearing, insurance going up, and borrowing costs going from basically 3%, 2021, 3%, to 7.5% now, it's a bloodbath for these investors. And as the economy gets worse and the job market gets worse, less and less people are gonna wanna own or be occupying office space in San Fran. And so you start to think about this. You're like, okay, a major shift of revenue is going to be moving from these offices, and these business owners are going to say, look, we're going to go fully remote. We're going to relocate to Miami. We're going to, just do things in which we can save more money and, not be as taxed as much. I mean, look at San Francisco, LA, a lot of these big cities, taxes through the roof. People are looking for ways in which they can survive and navigate this crisis. Now, here's where Nancy and Paul and all of these major players come in to, I think, clean up. So you have 2.7 trillion worth of commercial real estate loans that has to get refinanced in the next 3 years, from now until 2027. 70% of that debt is held by regionals. So they're holding, ballpark, about 2 trillion of this debt. Now, these lenders, they're gonna have to refinance this debt, or at least they're told they need to refinance this debt. On a home, when you buy a house, let's say for example, you buy this house, maybe it's 75K, 80K, right? You're getting a 30-year fixed rate mortgage if you get financing. And every month you're gonna make the same payment. And in the beginning, it's gonna be predominantly interest. And then over time, you're gonna pay more and more and more principal down, right? Because the average American stays in their home about 7 years. So the banks make their money on the interest. And then at the end, you barely touch principal. But on commercial property, it's a little bit different. Every 3, 5, 7 years, maybe 10 years, you have to go back to the bank, and the bank is going to say, look, you bought this deal. At that time, it was worth 10 million bucks. The vacancy rate was 5%. Now it's 25%. So you're making a lot less money. Your tax and insurance have went up. And we think the future is going to be a little bit more bleak with filling up these offices. And so because of that, we think that $10 million deal is maybe worth 5. And with that 5, we're willing to give you 70% loan to value. So maybe we'll lend you, maybe we'll lend you 3.5 million bucks, right? And then so the investor's saying, well, look, I bought it for 10. I put $3 million down. I put 30% down. I owe 7. You're willing to give me 3.5. That means I need to strike a check for 3.5 million bucks just to get the loan. And how many investors are going to say, I'm going to do that deal? Not many. A lot of them are going to be giving the keys back, and they're going to be giving it to Paul Pelosi and Nancy, who are going to step in there and clean it up and do all these office to residential conversions, because the office to residential conversion, believe it or not, it's actually cheaper to insure these properties. You can get direct funding. I'm not saying this is what they are doing specifically, but you can get direct funding from the White House for below market rate for office to residential conversions. I believe a lot of investors will be taking this opportunity because it's a $35 billion pool of cash just sitting there. So they get access to cheap capital, they buy distressed deals, access to cheap capital, cheaper to insure, and a hell of a lot easier to fill these units. It's a major opportunity that smart people aren't gonna, just let go by. And so when you look at that opportunity, you're like, okay, well, commercial real estate, residential conversions, everyone's gonna say, look, and I've seen in the comments, it's not gonna happen. It's not so easy, John. The way those properties are laid out, you're not just gonna be able to do that. Well, when you actually look at the surveys in New York City, they're talking about communal bathrooms. They're talking about, hey, look, before you would need, allocated parking spots per unit. There would be certain building codes and requirements that you'd have to meet to be able to do these conversions. Well, now they're waiving this. They're doing whatever they can do to stack and pack in these buildings. And the more people they can get into a building, the more money they can get out of it. And so it's just gonna be, I think, a major opportunity for a lot of these nonprofits, a lot of these large corporations, and a lot of these smart and savvy investors to step in there and find ways to make it work. And I think they're going to. It's all over whitehouse.gov and a lot of, very legitimate sources talking about the future of American big cities. And I think the future of San Francisco is extremely bright. If you've been to San Francisco lately, it looks like a disaster, right? You got crime. I mean, I was witnessing shoplifting right in front of me. It's just disgusting, right? But when you look at what happened with the summit last year, Gavin Newsom cleaned up that city in 24 hours. Beautiful, absolutely stunning city. That's what it actually is. If you look at the location where San Francisco is, it's just an absolute beautiful, stunning city. And it's going to become that again. Because as this city begins to change, they're going to start to attract a lot more, I would say, money. There's going to be a lot more people that are going to be invested in that city that are going to make sure that crime's not going to pick up. And I think that's going to happen through, facial recognition and so forth. So I think we're going to see a big opportunity to basically change commercial real estate in America, which is going to happen. The smart money is already betting on it. But then I take it one step further and I say, okay, good. That's commercial office buildings. Maybe that happens, right? I think it's going to happen. I'm like almost positive it's going to happen because you look at the money behind it, it's more than likely going to happen. But then you look at multifamily. And multifamily, it's very interesting because if you look at a place like LA cap rates are probably about 4%, maybe 5%. In 2021, some markets even lower than that. What is a cap rate? If you were to pay all cash for the building, it's basically your return. It's your net operating income divided by purchase price. And so it means if you bought $1 million building, it would make you 40 grand a year, hypothetically on a 4% cap rate. And so after your expenses, it doesn't factor in for mortgage. So what this means is that when you start to increase the supply of housing stock inside of certain areas, supply and demand dictate and determine price. It means rents are going to likely start to come down in a pretty big way. And you start to look at how many housing units are planning for San Francisco, planning for LA, planning for a lot of these big cities. Some of these are 100,000, 200,000, 300,000 units, talking about increasing that supply. So imagine if you were an apartment owner and you had in your specific neighborhood, let's just say you lived in one specific area and there were 500 tenants and there was 400 units available, 300 units available, right? The landlord would have control. What happens if there's 500 tenants and 700 units available, 600 units available, 500 units available, right? The power starts to flow back to the tenant. And this is what's going to happen. These conversions, these changes are going to be supported by increased insurance costs that are going to buckle the knees of a lot of these investors over the next couple of years, which will ensure this substantial change. Because you start to look at how powerful insurance is. Insurance basically controls everything. It controls one's home's value. It controls their ability to drive a car. It controls everything because 70% of Americans' net worth is tied up into their home. If the average, let's just say, for example, someone's making 10 grand a month, right? Easy numbers. They talk to a mortgage lender, the mortgage lender's, look, you can afford $3,000, $3,500 a month in a mortgage payment. Well, if they're in a high risk area and insurance is $1,000 a month, they can really only afford $2 grand or $2,500 towards their actual borrowing costs. So it greatly cripples their ability to borrow money on that property, right? Meaning they can only afford so much. And so they could probably afford $150,000 less of purchasing price because of the cost of insurance. But when the mortgage lender is looking at writing on the wall that every year insurance is going up, they have to forecast risk, which I think is going to be coming soon. It's getting harder to get insurance. Even Glenn Kelman, the CEO of Redfin, made this prediction. And so you start to kind of like add this up. You're like, okay, well, conversions of office to residential is going to be definitely happening. The smart money is already backing it. Insurance rates are already going crazy, and consumers are already starting to get tapped out. You just look at this big change. This is where we're all going. And I think Nancy Pelosi, a lot of the smart money, like they're hitting the nail on the head. Look at Castle Key. Look at State Farm. They denied between 46 and 47% of claims last year, right? That's crazy. You look at Milton. Look at Helene. Look at the amount of losses that people have went through. I went and toured that entire market, St. Pete Beach, Madera Beach. It's a tragedy what's happening with all of these properties. You're talking schools, you're talking hotels, you're talking homes, retail, everything just trashed, destroyed. A lot of times people don't have adequate coverage. They're unable to get paid on that. So they just take a massive, massive loss. Well, what's one person's loss, another person's gain. That's what's going to happen in a lot of markets, especially a lot of American big cities. And I think if you are thinking about investing, this major shift unfolding around insurance is going to either be a great opportunity for you or a disaster. But if you own a property outright, you have no mortgage at all, you technically don't need insurance. You do take a substantial risk without insurance though, but the risk is if something happens, say that's your house and something happens and the house, is no more, it goes away, it's burned, then you have to come out of pocket to build it again, right? So you take that risk, but I think we're gonna see a lot of investors saying, you know what, I'm willing to take that risk because they look at what's happening with the erosion of this dollar. The purchasing power is continuing to fade. Over the next 3, 5, 10 years, it's gonna get harder and harder and harder to survive if you're just saving dollars. People are gonna wanna buy key assets in great areas and great markets, and they're gonna wanna do this during the period of panic, which is what we're walking into now. So I think we're gonna see a major shift in commercial real estate, residential real estate, and an opportunity to build wealth unlike anything we've ever lived through. What do you think about this entire situation? I mean, look at this house over here. This is a beautiful house, in my opinion. It kind of feels like grandma's house, It's probably an $85,000 house, maybe $100,000. Investors are going to be stepping in acquiring this. Look at this. It's a really adorable little house. But investors are going to be stepping in acquiring properties that also are cheap to insure, properties that are too expensive to insure, commercial buildings. They're going to be looking to capitalize across the board on all these different shifts and trends with what's happening in the real estate market. Let's have a conversation below. And if you'd like to fix your credit to position yourself, what I believe is going to be the greatest wealth building opportunity in American real estate history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.